Let's now reconnect with Ricus Reeders to get an update on the busy day on the market globally and, of course, some activity here on the local bourse. Well, I believe that you can hear me now, Ricus.
Hi, Colin. Yes.
Yeah, well, I mean, let's get a global view first. How have the markets been faring so far globally?
Well, today specifically is pretty quiet because America is closed for Martin Luther King holiday. So, and when America is closed, the rest of the globe goes to sleep. That being said, in the Far East, we had quite a positive reaction to Chinese GDP, which came in higher for the fourth quarter, or even better than expected, which makes them the only global economy that got through last year's COVID pandemic without actually regressing as far as their economic activity is concerned.
So how's the momentum of trading on the local bourse, and looking at equities and those who have been moving in terms of the gauge of the winners and the losers?
Well, it's almost a day-to-day seesaw between what gets affected by a higher or a weaker rand. If on days when the rand is firmer, and mostly because the dollar is weaker, you will see things like banking share, financial shares, and consumer shares moving up. And when the situation reverses, in other words, the dollar might strengthen, the rand goes down, then your resource sector comes into play. That being said, with Naspers and Process being such a huge part of our local indices, a lot of the movement is as a result of the movement in those two shares prices as well, and that's dependent on what's happening with Tencent in Hong Kong, and they have a big holding in Tencent. And at the moment, as I've said, with the Chinese market going firmer, Tencent is going up, and Naspers and Process is sort of driving the indices. But if you take a look at the bulk of the market, the bigger part of the market, and that's also the sort of local companies, people who have their business inside South Africa, that's pretty weak, and it's a continuation of what we've been seeing last year. They're either not going anywhere, going sideways, or specifically as the effects of the pandemic worsens, you can see some of the local counters, which is highly dependent on economic activity, actually weakening as we go into the new year.
So as you mentioned that the local currency has been firmer, what do you make out of industries such as mining, and in relation to the uptick in the performance of the Chinese economy?
Well, if one takes a look at the metals on which those industries depend, whether it be iron ore or copper, those are still firming up and still looking pretty good. And the general consensus is that mining houses, big diversified mining resource companies, will still benefit from that. And I think one should separate that from gold mining companies, which is a little bit of a different story, because that's more a play on whether people choose the dollar or gold to go in. But if we look at platinum miners, iron ore miners, copper miners, those are all doing pretty well. And then, of course, there's the other odd one out, if I can call it that, which is those companies which is dependent on energy, whether it be coal and specifically crude oil. And we've had a nice rally in crude oil, but I think the fear that with the latest upsurge in the coronavirus epidemic, your global growth might not come along as quickly as people thought. You're getting some weakness coming into crude oil prices, and that affects companies of whose operations depend on oil. And one can look at something like Sasol, for example, which still gets a huge part of their income from oil.
So what's your gauge of the outlook of the South African rand, also gauging how the economy is going to perform, given that right now we are facing a bleak future in as far as deaths, infection rates and recoveries are concerned?
I think longer term we are still sitting with an exceptionally weak economy, and that's dependent on two things. Obviously, the global coronavirus epidemic, but also just complete and utter not such good management of the economy itself by government. That in the long term will weigh on the rand. You can't get away from that. But in the shorter term, the currency is probably bound between about 15 rand to about 16 rand for the dollar, and that's just a function of interest rates. In other words, because of the interest rate differential, what people can get by investing in the rand, if I can simplify it, the interest rate is still good enough for the rand to stay reasonably firm. But if something doesn't change very concretely as far as management of the economy itself is concerned, and that's specifically from government, I can't see the longer weakening trend actually turning around.
All right, Lucas, thank you so much for giving us an update on the market. And of course, he is the wealth manager at PSG right here on SA Today.